Not long ago, President Trump made a bold statement aimed directly at Walmart. His message? Walmart should eat the cost of the tariffs, end quote. This comes after Walmart publicly announced that it has no choice but to raise prices because of Trump's tariff hikes. And just moments ago, new breaking reports confirm it. Walmart is officially increasing prices to cope with the mounting tariff costs. But here's the critical part. Walmart is warning consumers not to panic buy. Instead, they're urging shoppers to brace for gradual price shifts. Yet behind the scenes, something more concerning is happening. Retail giants like Walmart and Target now risk losing access to popular products because of the ongoing trade war. Imagine this. You walk into your regular Walmart store to grab your usual groceries. Your 500-gram tray of beef. Yesterday it was $9. Today it's suddenly $14. A head of lettuce? Up by 30% overnight. Even your morning cereal box isn't safe. It's nearly $2 more than it was just last week. Before you realize it, Walmart's famous everyday low prices banners have quietly disappeared. Why? Because Walmart is trying to avoid slipping deeper into a $25 billion net loss for the second quarter of 2025. But here's the catch. It's not just shoppers who are feeling the pinch. Walmart has announced plans to temporarily shut down 10 of its key distribution centers by the end of June. This move could lead to over 50,000 layoffs, setting off a chain reaction that threatens the very just-in-time delivery system keeping American retail afloat. So, who's at the center of this storm? All eyes point to the tariff barrage unleashed by President Trump. Each new tariff announcement turns every shipping container into a time bomb of extra costs. And if the White House doesn't act soon, America could face the biggest retail collapse in history, possibly right before the crucial holiday season. In this video, 3 Daily News will take you on the most in-depth analysis of today's retail price shock. And here's a word of warning. At any moment, the cash in your wallet could lose value without notice. So make sure to subscribe and ring the bell so you won't miss any of our urgent updates on the political economy. Let's rewind to April 2nd, 2025. That's the day the White House transformed the Rose Garden into what some are calling a trade war battlefield. President Trump signed Executive Order 14,257, now commonly referred to by the media as the Liberation Day Tariffs Package. Starting at midnight on April 5th, every shipment entering the U.S. faced a new base tariff of 10%, with the exception of Canada and Mexico. But that was just the beginning. 4 days later, the administration unleashed a series of tit-for-tat tariffs targeting 60 of America's official trade partners. The hardest hit? China. Trump slapped a 145% tariff on most Chinese goods. The fallout was instant. At the Hunar Toy Factory, a major Walmart supplier, executives were forced to slash production by 70% in April alone, triggering massive order cancellations just hours after the tariffs took effect. In fact, within just 4 weeks, the American Toy Association warned that nearly 45% of its members were on the brink of bankruptcy. Meanwhile, shipping costs between Shenzhen and Long Beach nearly tripled, even though demand was falling sharply. Europe wasn't spared either. On May 2nd, President Trump issued a new threat, a 50% tariff on all EU goods unless Brussels caved to U.S. demands. A last-minute call with European Commission President Ursula von der Leyen bought a temporary extension to July 9th. But honestly, the damage was done. In just 3 trading sessions, the Euro Stoxx 600 slid 4.4%, wiping out more than $180 billion in EU market value. German car exports to the U.S. froze. Factories across Europe stood still. Over in South Korea, panic set in as well. On April 3rd, the U.S. slapped a 25% import tax on foreign cars, threatening nearly half of Hyundai and Kia's exports to America. This forced the Korean government into emergency talks, scrambling to protect its auto industry from collapse. And this is just the start. In the middle of all this chaos, supply chain giants, especially Walmart, are scrambling for solutions. Walmart, which used to move 11,000 containers a day using a just-in-time system, is now facing stock shortages, soaring expenses, and, most worryingly, a projected $25 billion net loss in the second quarter. That's the backdrop for the crisis we're about to break down. This isn't just a corporate logistics problem, it's hitting everyday Americans directly in the wallet. Since Trump's 145% tariff on China took effect, the cost of shipping a 40-foot container from Asia to the U.S. has skyrocketed, from $3,500 to $6,500 in just the first 3 weeks of May. That's an 85% spike, with shipping companies warning that $8,500 per container could arrive soon. According to Freightos, there's been a 20% increase in blank sailings, stranded containers, and 2-week shipping delays. This has dealt a fatal blow to just-in-time logistics. Walmart, America's biggest container importer, now admits there are times when store shelves sit empty because trucks are stuck waiting for containers to clear customs at ports. The cost explosion doesn't stop at sea. On land, a warehouse leasing frenzy has taken over as companies try to stockpile inventory before the next tariff wave hits. As a result, bonded warehouse rents have quadrupled, while regular storage fees have jumped 60% in just one quarter. Flex, often called the Airbnb of warehousing, reports that inquiries for bonded storage have surged sixfold, creating a waitlist for space. Meanwhile, Walmart has paused operations at 10 distribution centers to cut losses. But even idle containers are costing the company millions per day in rent, utilities, and labor, expenses that just-in-time once nearly erased. Now the fallout is trickling down to supermarket prices. Economists estimate that the new tariffs will cost each U.S. household an extra $1,000 per year. On the retail front, CFO John David Rainey warns that price increases will start at the end of May and speed up through June. Imagine a pound of choice beef jumping from $12 to $14, a patio set from Guangdong tacking on an extra $60, a $350 child car seat from Suzhou slapped with a $100 tariff. As Rainey told CNBC, Walmart's famous everyday low prices promise is under serious pressure. From containers stuck at sea to empty shelves in your local store, this tariff shock has broken the just-in-time system that U.S. retail has depended on for the last 30 years. While the White House continues to argue that tariffs will reduce living costs, the reality is that warehouse workers are being sidelined, and American families are paying more for basic goods, like a box of cereal. The road ahead for Walmart, and for consumers' wallets, is getting rougher, as freight, storage, and retail costs continue to rise, leaving low- and middle-income families struggling to keep up. Then, on the afternoon of May 28th, a 12-page confidential memo titled Project Triage leaked from Walmart's Bentonville headquarters, sending shockwaves through Wall Street. Walmart is set to temporarily shut down 10 major distribution centers over the next 6 weeks, spanning coast to coast, from California to Florida. The affected locations include Riverside and Fontana in California, Brooksville and Winter Haven in Florida, Pageland in South Carolina, Sanger in Texas, Elwood in Illinois, Groveport in Ohio, Plainfield in Indiana, and Menominee in Wisconsin. Each of these sites serves as a distribution hub or order fulfillment center, and they are massive, each exceeding 800,000 square feet, and operate around the clock as part of Walmart's 151 million square foot logistics network. According to supply chain consultancy MWPVL, a typical Walmart regional general merchandise distribution center employs over 1,000 full-time workers, plus another 1,500 temporary staff during peak seasons. When you multiply that across 10 locations, the People's Union USA estimates that around 50,000 jobs will be impacted. 70% of them are contract or agency-based positions. These suspensions, set to begin on June 30th, will occur without pay. The news immediately sparked backlash, prompting a nationwide 72-hour Don't Shop at Walmart boycott, scheduled to begin this coming Monday. But it wasn't just labor unions voicing outrage. Local governments jumped in as well. In DeKalb County, Georgia, where 2 Walmart superstores had already shut down earlier this year, Mayor Lynn Deutsch warned of yet another blow to workers' livelihoods after hearing about Groveport's closure. Meanwhile, in Brooksville, Florida, where distribution center number 630 accounts for 9% of the city's tax revenue, the city council held an emergency meeting. Their main concern? A potential domino effect on the 200 trucking companies that operate around the Kataring Road Industrial Park. At the national level, the sudden loss of 50,000 jobs ignited intense political debate, especially coming just a week after Walmart announced plans to cut 1,500 corporate roles as part of a streamlining effort. Bipartisan lawmakers are now demanding a House Commerce Committee hearing to find out why Walmart would throttle its distribution capacity at a time when the White House insists President Trump's tariffs aren't damaging Main Street. But the situation strikes at the core of Walmart's everyday low-price strategy. With nearly half of its bulk storage capacity going offline, Walmart is now being forced to extend its restocking cycle from a tight 48 hours to a much riskier 5 to 7 day window. Stores across the southeastern United States have already been advised to fill up freezer space, as fresh food deliveries may arrive late. Industry analysts are sounding the alarm, warning that Walmart's just-in-time inventory system, once praised as a gold standard, is now dangerously close to collapsing. On social media, the reaction has been swift. The hashtag #EmptyAisles exploded on TikTok, reaching 12 million views in just 24 hours. Users posted videos of bare shelves, tagging former President Trump with the pointed question, Can you stop this tariff war before bread and milk become luxury items? From 50,000 families facing unpaid leave to a fractured supply chain and a wave of online outrage, Walmart has now become a political flashpoint. The central question remains, are these protectionist tariffs really bringing jobs back to America, or are they pushing thousands of warehouse workers into economic limbo? In Brooksville, Florida, for example, Everbright Sewing, which used to supply 20,000 uniforms a month to Walmart, has already shut its doors, posting a sign that reads, "Closed due to order cancellation." The factory owner didn't mince words. One call from Walmart's procurement team sent us straight to bankruptcy. Unfortunately, this is not an isolated case. Reuters reports that as early as March, Walmart began pressuring Chinese suppliers, from cookware manufacturers to clothing factories, to slash prices by up to 10% with every new tariff round. This has pushed hundreds of already thin-margin businesses into a cut or collapse scenario. The fallout has been severe. At Hunar Toy Factory in Guangdong, a contractor with Walmart for 40 years, production had to be cut by 70% after United States buyers canceled orders due to the 145% tariff hike. Within just 3 weeks, 130 out of 400 workers were laid off, and that's just the overseas impact. Back home, the United States Small Business Association's confidence index fell to 95.8 in April, dipping below its 51-year average. Business owners are reporting unprecedented uncertainty as contracts get riskier with tariffs changing at any moment. The chaos hit logistics next. Shipping container rates from China's west coast soared from $3,500 to $6,500 per FEU, and experts predict costs could reach $8,500 by mid-June as carriers cut sailings to dodge new duties. On United States highways, the trucking industry saw a temporary spike as customers rushed to import goods before tariffs hit, but now it's crashing. DAT Freight and Analytics predicts flat truckload volumes for 2025, while Knight-Swift's CEO admits there are no green shoots for third-quarter demand. With Walmart centers offline, local carriers are losing steady contracts, forcing drivers to either run empty backhauls or face unpaid furloughs. The domino effect doesn't stop there. Starved for cash flow, small suppliers are cutting insurance, delaying payroll, and asking for loan extensions. Some experts warn that this could push United States small business defaults to levels not seen since the 2008 financial crisis. The once tightly knit ecosystem that revolved around Walmart's logistics hubs is starting to break apart. Logistics firms, warehouses, even the sandwich shops next to Walmart distribution yards are reporting plummeting revenues. As one Wall Street analyst put it, when a warehouse locks its doors, every truck parked outside starts to rust. And the scariest part? This isn't just about higher grocery prices. If things continue this way, entire industrial parks built solely to serve Walmart could disappear, taking tens of thousands of uncounted jobs with them. If the White House continues to claim that tariffs will revive domestic manufacturing but fails to protect these critical supply links, the crash won't just look like empty shelves, it will look like entire communities collapsing. So far, Walmart has reportedly lost $25 billion due to the tariff fallout, but the company is fighting back through its secretive plan called Project Reset, aiming to completely rewire its supply chain within 24 months. A key part of that strategy is quietly shifting sourcing away from China. Before the 145% tariffs, around 60% of Walmart's non-essential consumer goods came from China. But by the end of Q1, 2025, that number had already dropped to 48%. Walmart is rapidly re-signing contracts with factories in Vietnam, India, and Cambodia. In fact, a Vietnamese Ministry of Industry and Trade official confirmed that Walmart plans to invest an additional $1.2 billion into expanding textile and home goods production there. In return, Walmart hopes to secure a reduced United States tariff of 25% on made-in-Vietnam products. But making that shift is far from simple. Just back in April, the White House threatened to push Vietnam's anti-dumping duties up to 46%. They later hit pause for 90 days, but the damage was done, forcing long-term contracts to be written and then canceled within just a week. Walmart, realizing it can't risk depending only on Asia, made its next move. The company announced a massive $5 billion investment into its Made in Heartland initiative, planning to build 3 new factories for home goods and electronics in Arkansas, Ohio, and South Carolina. According to Reuters filings, that $5 billion came directly from a bond sale Walmart completed in April 2025, right before interest rates started climbing. But this is just the beginning. Walmart has publicly committed to spending $350 billion over the next decade to boost domestic production, agriculture, and assembly. Their goal? Cut shipping times from the usual 28 days down to less than a week. Next comes the third step, and Walmart's hidden ace: which sounds like something out of science fiction. Walmart signed a $520 million contract extension with Symbotic, a robotics company, to roll out a self-learning AI system across 400 of its order fulfillment centers. Internally, Walmart calls this system Link 16, borrowing the name from the United States military's real-time tactical data network. The AI continuously monitors freight costs, weather conditions, and shifting tariffs, automatically calculating 3 different cost plans to reroute shipments before penalty fees hit. Walmart's leadership expects Link 16 to save the company about $600 million a year in late delivery charges and port storage fees. If all goes as planned, Walmart may even offer this AI forecasting tool to smaller retailers through an API, turning it into a service. But despite all this, Walmart's new strategy is hanging by a delicate thread: tariff uncertainty. Every time the White House suggests raising or lowering duties, Walmart's logistics teams have just 72 hours to redraw their entire supply chain map, a near impossible feat for a company valued at $680 billion. So even though the $5 billion initiative sounds proactive, Wall Street analysts are warning. All it takes is one more unexpected tariff tweet to send costs soaring by billions, potentially making Walmart an accidental casualty of this ongoing trade war. The impact is already visible. Less than 6 weeks after the so-called Liberation Day tariffs kicked in, the United States stock market has experienced a sharp sell-off. Walmart is at the heart of it. Since April 2nd, when the basic 10% tariff plus the additional 145% levy on Chinese goods went live, Walmart's stock price has fallen by about 11%, erasing nearly $37 billion in market value in just 30 trading days. The sell-off was so severe that index funds had to rebalance their holdings, adding even more downward pressure on Walmart's shares as they tried to maintain their retail sector weightings in the S&P 500. The panic didn't stop there. The shockwaves hit the logistics sector next. On March 21st, FedEx slashed its full-year forecast, warning of a very tough environment. Its stock plunged 11% in a single morning, the steepest one-day drop since the COVID-19 crash in 2020. Other transport stocks followed. The Dow Jones Transportation Index, which tracks companies like UPS and J.B. Hunt, has dropped over 17% from its November peak, reflecting deep worries about supply chains freezing under the tariff strain. Even UPS wasn't spared. Despite landing a new healthcare logistics contract, it announced 20,000 layoffs and plans to close 73 facilities, blaming shrinking Amazon shipping volumes and rising tariff costs. UPS shares still fell 8% after the news. Real estate took a hit too. Prologis, the giant warehouse landlord that partners with Walmart, saw its stock dive 9.6% on April 3rd after Walmart announced it would close 10 distribution centers. For Prologis investors, it was the worst drop since the pandemic started in March 2020. A Bloomberg analyst called it the final nail in the belief that logistics real estate is immune to trade wars. The fallout continued. Within just 48 hours of Walmart's crash, investors pulled over $6 billion from retail and transportation ETFs, marking the largest sector outflow since the 2008 financial crisis, according to Refinitiv data. Bond markets also reacted. Yields on investment-grade BBB corporate bonds jumped 55 basis points, forcing Walmart to pause its next $5 billion debt issue tied to the Maiden Heartland project. Meanwhile, the VIX index, Wall Street's fear gauge, spiked above 26, signaling high anxiety in the market. The message is clear. If the White House doesn't cool down this tariff battle soon, today's retail meltdown could be just the beginning. Job losses, collapsing investments, and sinking consumer confidence may follow. 3 weeks after the Liberation Day tariff started, the European Union issued a warning. Brussels said that 380 billion euros worth of EU exports to the United States, 70% of their total, are now at risk. The EU is threatening 95 billion euros in retaliatory tariffs unless Washington de-escalates before July 9th. European leaders also pointed out that tariffs alone won't fix the $226 billion United States trade deficit with Europe. In Canada, Prime Minister Mark Carney declared that Canada would retaliate, calling the United States tariffs a political debt that must be repaid. Mexico took it a step further, warning that a new 25% duty could wipe out 400,000 jobs right on American soil, breaking the spirit of the USMCA trade deal. Markets didn't wait to respond. The EU Business Confidence Index fell to a 3-year low. Canadian bond yields rose, and investors rushed into safe haven assets like gold and the Swiss franc. The risk of a lose-lose scenario is no longer theoretical. The United States is losing export market share, and trust from its allies is evaporating. So the big question remains, will President Trump ease tariffs to stabilize relationships, or double down, turning this into a long, painful trade war for everyone involved? Rumors of Walmart shuttering 10 distribution centers and reporting a $25 billion loss aren't just internal drama. They are a loud warning. Tariffs aren't just numbers on a spreadsheet. They're a knife slicing through global supply chains. Reuters confirmed that Walmart had to raise prices across the board, forcing United States shoppers to pay 2 to 3% more each month to cover the new tariff costs. If the White House continues with its 145% duties on China and dozens of other countries, the damage won't stop at retail. Heartland factories could halt production. Hundreds of thousands of workers may face layoffs. And the global financial system could wobble, as the IMF warns that this trade policy risks breaking the world trade order and igniting financial instability. Now, with the EU, Canada, and Mexico all demanding negotiations, it's not just about profit, it's about repairing broken trust at the global table. In the end, one haunting question remains. Will President Trump back off to protect supply chains and his own political future? Or will he keep pushing this trade war, risking unprecedented losses for the United States and its allies? Stay tuned for the next chapter. And don't forget to hit subscribe and ring the bell so you never miss an update from 3 Daily News.